Okay. Good evening, everybody. I hope you can hear me. I hope you can hear me good. Awesome. Okay. As you all know, my name is Tope, and welcome to Israel Keys Wealth Group again today. Um, so hold on, I'm hearing that there's a technical hitch again.
Uh, Seems we're having the same issue with Tucker's connection, but we will sort this out a lot quicker than yesterday. So just one quick second. Let me know if you guys can hear me. Let me know if you can hear me while we're getting Tucker recalibrated. All right, cool. By the way, how was your day in the markets, everybody? Um, what did you trade? Let me know down in the comment section. What did you trade? What did you analyze? Okay. Um, just checking. One. Okay. Yeah, you should be able to hear me. All right. I think Tucker is ready to go now. Let us get him back on. Right. Over to you, Tucker. There you go. Tucker, you're live. Over to you. Tuck, we're not sure if you can hear me, but we can't hear you over on this side. Tuck, we're not sure if you can hear me, but we can't hear you over on this side. Tuck, we're not sure if you can hear me, but we can't hear you over on this side. Folks, really apologize for this. We've just changed something with the system since yesterday, and obviously we're having issues patching Tucker in from where he is. We will get it sorted in a second. All right, so in the interim, let's see if we can get him out. All right, Tucker, can you hear me now? I can see you're in. I can see your screen. All right. Hello, Tucker, are you there now?
Yes, I am, but I don't know if you can hear me.
We can hear you. The background noise is back, but let's just go with it. Let's just go with it. All right, carry on. Hello. Talk, but you still there? Okay. Right. All right. I think he's trying to log in on another system. I am going to have to hijack the class till we can get him back in. In which case, let's do this. All right. Two seconds, guys. We will fix this. Really apologize. All right. Okay. I'm gonna move this one. Okay, we can hear you now, Tucker.
Okay. I don't seem to be able to solve
Fine. Your audio is
connection.
fine. So no, your audio is fine
Okay,
now.
the audio is
You
fine.
might need to use the screen on the computer you were using before. So you'll need to use both, one for the audio, one for the video, one for the screen. So if you go back right now, your screen's currently showing that you've logged out of your trading view on one account on one computer, I think, because you've logged into it on the other one. Okay, cool.
Yeah.
All right.
Okay, 2 seconds.
Tope, you ready?
Okay, can you hear me now?
Your audio is fine. We're just waiting for your screen. Are you able to share your screen, Tope?
2 seconds. I'm almost there. Okay. Should be fine now.
All right, carry on.
Okay. I hope you can hear me clearly now. Sorry for the glitch. Let's see. All right. Okay. Oh, okay, guys. Finally. Since I logged out of the previous account, it's not brought up my the 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 chat that I set up for you guys. But anyways, we'll still carry on. We'll still do what we have to do. So greetings again, one more time. I hope you're all well and good. So tonight we're just going to be focusing on key levels. Okay, we're going to be talking about key levels, and like I was saying before, the glitch. Key levels is one of the very important things that you cannot do without. In this business, key levels is one of the main things you can't do without in this business. One trader once said that in all of his years of experience, this guy had been trading for like 10-15 years. He said in all of his experience that the best thing that ever happened to him was how to draw a horizontal line. Say drawing the right horizontal line. That was so that to me, I thought, wow. It was until later I understood what he meant by that. The ability to draw the right levels, to find the right levels, to trade off of the right levels. That is just it just one key, something that you don't ever want to miss out on. Once you're able to trade around the right levels, and the rest will be, the remaining things for you to do is not going to be that difficult. It's just going to be for you to, obviously, you need to have risk management in place and all that stuff, but knowing where to trade, and when to trade, we already told you about that, the time of day, days of the week, that's easy. But around what level, what levels are the best levels? And that's what we're going to be covering today. Okay. I normally like to set up my chat way before time, but the system messing me up did not let me to do that. So everything is I think we just do it on the go. So like we were saying, we're going to be talking about key levels. I think the first thing I like to ask is, that we can start thinking of is, okay, what are key levels? What are key levels? Key levels are just those areas in price where we are expecting a high probability of response from the banks or the market makers, okay? And they have, they have various levels that so there's intra-month levels and intra-year levels and intra-week levels and even daily levels that they like. These areas are the areas where they go to most of the time. I think in the last couple of weeks, Israel would have mentioned a few of them to you. He was talking about weekly highs and weekly lows and stuff like that. So those are some of the major levels, and that's what we're going to be touching on today. I know yesterday as well I set out some homework. I hope you guys have started to look into it, because I'm going to be adding to it today around key levels. So I would expect you guys to be looking into that as well. So if you've not done it, you're going to have an extra homework today for you to identify key levels. Okay, so that's what we're going to be doing. You're going to be looking at today. So like I was saying earlier, key levels are those areas where we as traders expect the same sort of reaction from the banks. Okay, to the banks, those levels are just levels where there's a lot of liquidity, there's a lot of orders, there's a lot of stops, there's those kind of things are what the banks are looking at. But we will tell ourselves these areas are the areas where we expect reaction. Okay, we are looking at a price level, they are looking at millions and millions of pounds stacked up in a level. I once was privy to an indicator or some sort of like algorithm that showed where there was a lot of stop. It's called stop loss cluster. So it was showing, I think it was a friend of mine who had a chat with someone in JP Morgan. They showed him this indicator that it was showing. I wouldn't call it an indicator, this algorithm that showed the banks, the traders, so the guys in Canary Wharf and all that, the traders, where you place your stop, where I've placed my stop, and they look at a cluster. So whereas the majority put their stop in, so that indicator looks. Don't let me call it indicator. Like I said, I think for now I'll call it indicator. So it looks like this. So at different levels, it plotted, a thick line. The thicker the line, the more volume of money in there. So at different levels, you see stuff like that on the screen. He sent me the picture, the screen capture of it, because it was there and it kind of did he took a picture. You would see stuff like this on the screen. Okay, and at those levels, it also had values in there. It was saying stuff like 30. There would be like the volume of trade there. So it would say 30 million. Some level would say 40 million. Another level, So the higher the number, it means the higher the number of stops that have been placed there or orders that have been placed there. And all they just then do is they trade, they trade within those levels. And as Israel explained to you last week, someone with big pockets, they would like to move price in a to make profit. So if they want to go long for a few stops at the bottom here, below the bearish candle, there's like 40 billion, worth of stop there. They would just say, okay, before we move up, because this big pocket guy wants to drive the market up, before we do that, let us engineer liquidity for ourselves to get a very cheap price for this guy, to get a discount price for this guy. So they see all this slight move down, they're just engineering liquidity and they're not breaking past that level. And you can see stops would have stacked up here. And then what they then do in this next H4 is to just come in deep into it, into that cluster of stop, and then off they go. Okay? And they do this repeatedly all the time. And that is why we have stop hunts. That's why we have stop hunts. Okay? So, going back to the story of this trader, he said the best thing he learned to do was where to draw his horizontal lines and how to draw horizontal lines. And I took that on board and I said, okay, if horizontal line is working for him, what does he really mean? And then I soon discovered about stop hunt. I soon discovered about, previous week's highs and lows, previous month's highs and lows, previous day highs and lows, as well as the opens and the closes of weeks and months, monthly candles. Okay, so I think let's use Euro USD as our guinea pig. As we always like, Euro USD is our favorite pair. So I'm going to be using that to draw our levels today. I'll be using it to draw the level today. I'm just going to clear all of this up so the chart can look nice. Okay. Okay, so all clean now. The first area that I think we should go would be for us to go and look at our monthly. Okay, let's start from talking about monthly. Okay, aside from the standard support and resistance level, so the standard support and resistance level, the areas where you've seen lots of activity. So for example, if I just zoomed out a little bit now, you can see, you can see that there's an invisible level here that is holding price down, and another level is holding price up. So the first area will be this level. Let me just draw this. Okay, look at that. So price couldn't break up until here, and then when it broke past it, price couldn't come down until here, and then when it's below that level again, price couldn't go past it until we are looking to go past it here. Okay, so this is like a standard support and resistance kind of level. Okay, and then at the bottom you see this level. Price couldn't break and close below this level since 2015, 2016, 2017. Nothing could happen. If I zoom down, I'm sure this level over here, you'll be able to see some sort of correlation to that cross. Look at that level there. So this is your, like, this spot here was a support initially, and then it became resistance over here, and then we saw another area of resistance, became support, broke through it, became resistant again, and they're about to break up through it again at this level. Okay, so now this is the standard support and resistance that we're looking at. But price, even when price gets to this level, it still does certain things around certain price points. Okay, it still has to do something to another price point, and this is where I want to bring you to the highs and lows of your higher time frame candle. Okay, so first thing I want you to bear in mind, let me type this on the screen: highs and lows, highs and lows. So highs and lows of the most significant ones are. So now the significance of highs and lows, is dependent on the type of trader you want to be. So if you're looking at monthly highs and lows or yearly highs and lows, you're likely to be a swing trader. You'll be looking at that a lot. If you're looking at weekly, you'll be more of like intra-week trader, and if you're looking at daily, you're an intraday trader. Okay, so it means you take your trade in the day and you close during the day, or hold maximum for one day. So, but this concept that I'm about to tell you, it is important to across the board. So if you're going to be working with daily or you're going to be working with monthly, it's all the same. Okay, so I'm going to zoom in now to look at a candle specifically. Okay, so if you remember, we identified this level at the very top here. Let me put it back again. This level here, that that area was a sort of resistance. Okay, And this bottom here was an area of support because it held price up. And then I said that when price gets to this significant level, I think, let me put one more level here, for the initial resistance became support and then became resistance again. Let's leave that there. Now, what they will always do when they get to all of these significant levels, before they move in whatever direction they want to move to, is they look for a significant level. And I'm going to call that a previous high or a previous low. Okay. If they're going to be looking to go south, they'll be looking at a previous high. So for this level we are in, let me zoom in for you. So let us look at why and how they took this move down. Okay. So we got to this previous resistance level. Okay. And so we are anticipating a short, but they would not do it without touching a significant level, a key level. Okay, a key level. Let's stick with key level. Okay, and I've said the key levels that you should take note for now will be highs and lows. Okay, and when I'm saying highs and lows, I'm saying highs and lows of your monthly candle, of your weekly candle, and your daily candle. Whichever time frame you pick is down to the type of trader you are, as I explained earlier. So in this case, we'll be looking at a previous high of the monthly candle. So I'm talking about this candle over here, this candle, and the candle 18th of January, the month. Okay, that candle there. So when the next one came in February, when February came, once February opened, at that point, if it is into February, it looked like February was going to be a bullish month as well. Okay, but instead, when February started and they got to the previous high, that is January 2018, when they got there, okay, and spent maybe a couple of hours or one day in there, price reversed sharply. Okay, this black candle, and then all of a sudden price just moved down aggressively from there. Okay, now the reason why key levels are very good, if you watch some of the lessons we've done in the past, you've heard of this. The kind of thing they've done with this key level is they've done a stop hunt. And if you notice, they went past that level by a little bit. And what they were able to do is, on this monthly candle that was, so I opened at the bottom and rallied all the way to that high spot and started coming down, that trade coming down. Okay. And as they got this trade coming from that very high to this close over here, they were confident that obviously the next month opening there would continue south. And the way textbook, standard trading textbooks, I thought everybody is, they say you should put your stop, at a, a high, the weekly high, monthly high, daily low, weekly low, monthly low, those kind of stuff. And that's what they would have done here. And once they have done that, the bankers and the market makers, remember I was telling you about this cluster algorithm that they have. It would have told them that over here, we have 40, 30, 20 billion worth of orders in there, or people put their stops in there. So there's a lot of sell stops in there, to help them risk manage the trade they've already got. So these people have initially won this trade coming down, and they've moved all their stops to that level. At the same time, some people who are anticipating a continuation along. They've put their orders, breakout orders there. And what they simply do is come deep into that level and reversed. What that has done for them is to help them fuel the move of this price in the direction they actually want to go. But before they do that, they have to fake that they're going the same direction, the anticipated direction that these people got first, and at the same. Okay, so that's one, looking at the high of this monthly candle. Now, what then also happened is, so remember I said we're going to be considering highs and lows for today, okay? And in next session, we'll be looking at the opens and the closes, how you can use those as well, okay? In fact, I might roll that up tonight because the open and the closes there's important as well. Now, so we've talked about the high of this candle. Now, if you notice something, when this candle, this next month candle opened, it opened at the same level as the close of the previous month. I always like this kind of price action. Okay, this is a key level. When you see a monthly or weekly candle open and close at the same price level, guaranteed they will come back to that level in the nearest future to use it to fuel a move in the desired direction they want to go. And what do you know? Look at this. So first month they did that. Second month they came back. They didn't touch it till the peak went past it because there's likely to be some other levels in here daily or weekly. But look at this month. This month opened, went straight to the point, to the peak over there, and then dropped. Okay. If you had this level, now the exact same thing that I just told you with regards to this thick line that I drew initially as the normal support and resistance level, in this case resistance level, and before you take it, you should look for this sort of price action that they are deeping into another key level, so which is the previous high. Okay, because we're going south now, previous highs will be taken if they want to go south. The same thing you want to do when price on a lower time frame gets to that level you've drawn out. This is another key level where we have 2 months worth of open and close of price. Okay, imagine 2 months of data, right? They have their open, they have their close and their open at the same level. It means that level is important. Okay, and what they've done is they've come back to that level. When they come back to that level, you want to look, then don't just trade it blindly to say, oh, it's come back to the level. You then start to look for the various price action that we talk about in the group. Okay, if you're able to frame your trade around that level using, our 1, 2, 3 H4 stop on market structure break, scenario in this level, you will have had a very handsome take home. Okay, you'll have had a very, very beautiful trade. You can imagine if you got the trade and look at this. Let me draw this. So you came, let's measure. So if you just held for the month, 369 pips. If you're bold enough, held for the next month, over 900 pips. Just because you framed your trade around one line. Around one line, okay? Around one key level. Around one key level. Okay? So, we continue. So now, as you see that this trade is developing, we can now continue to mark some other key levels that we see. So we have a previous high. So now I'm talking about this blue candle. Now we got its low. Okay, price continued. We got this big bullish candle, the low, and then we got, can you see this level? Open, close, open at the same level. Mark it out. That's another good level. And in between those, we also have this one over here. Look, open, close relationship here. That one is very tight. Okay, so look at this. Although the other ones were used, I could draw some other ones there, but look at this. I just want to highlight this for you. So look, there's another open close relationship here. And if you draw that forward, look, price came back down into that level and took off from there. MYKK says, is asking that this level are different than other block levels. Yes, they're different from other block levels. This one we're looking at, let me actually add. We're looking at high and lows, open and closes. Okay, high and lows, open and closes. Open and closes of higher time frame candles. Okay, so we're looking at the highs and lows, open and closes, their relationship. For open and closes, the strongest are going to be they're going to be the higher time frame level. So the opens and close relationship of the monthly and weekly, I take that to be very significant, to be a key level. Okay, so let's move further. So this level that I highlighted out for you and drew out, if you notice what happened when price closed below that level, what happened? Price came back into it over here. Let me put the arrow there again. I'm referring to this point. So now in the month of June, price rallied back up to the pip on that level. So again, I ask you this question. If you mark this level out on your monthly and you go onto a lower time frame, still having that level there on a lower time frame, and you build your or you frame your trade around that level. So mean you transpose this weekly or this monthly level that we've drawn here, you transpose it onto your lower time frame, and in the lower time frame, I guarantee that around this level you will be seeing some very, very significant confluences that will make it very important. So for example, you could be seeing other blocks at that level. Okay, you could be seeing stop hunts, you could see daily stop hunts or H4 stop hunts, market structure break into those levels. Okay, and that will then give you the extra confidence to take the trade. The first confidence will be, okay, I got this key level there. Secondly, I got an order block there. Thirdly, I got a H4 stop hunt into that level. All those will help you say, okay, this trade looks like an A-star trade. Okay. So let's come to one that is more current, and we can use that as an example. So in this case now, I'm going to use this November 2019 and December, their price relationship there, the open close relationship here. So if you want to take your attention here, let me put the arrow here. So if you look at this month, so September, this is September, and where is it? Let me move this away. Yeah, that's December and that's January. Yeah, December and January. Okay, that price relationship over there. Now, if you see price, let's just forget all what happened here. You know, there are many things that happen here. We can frame trades around. But now, look at this month now where price took off from. Look at that. It touched it to the people and took off. So now this is what you do next. So this is a key level we've identified. So let's now go to, let me change the color so it's standing out. Let's make it black. Let's make it thick. So when we drop down, we can see properly. So first, let's go to daily time frame. Okay. So month of July started where? Look at this. This is beautiful. I mean, so month of July started here on that red line. Okay. At that same level, we have now MYKK. Start to take note of this. We've had price. The price just was dancing around this area, but we saw this significant move up from there. So we've identified, we would have identified in hindsight. So by the time this month is starting, we've identified there's a daily bullish order block there. Let me make that more transparent so we can look into it. Now this is it. So we got this line from November and December 2019. Price the open and close level, and at that same level there is a bullish order block formed. Price is coming to it once in here. Okay, nothing happened. So it came in here and price started moving up nicely. But remember what I said about key levels. Key levels. We're also still talking about highs and lows. Now around this area, we also frame our trade around that area. Okay, so it means we look for the standard we look for. So without even me going to H4, I can already see we have a previous sort of previous days or possible week stop hunt at this level. Okay, so in this new month, price came below 1, 2, 3, 4, 5, 6 days, took it out and then did some magic. Now let's go to H4 level. Now you see what I'm saying. And if you remember very well, we were able to point out this trade when it was happening. Okay, when it was happening. So now this is a daily order block we marked out. Okay, we marked out today. But if you remember this level, we were talking about this level a few weeks ago. Okay, we saw a stop hunt. Where is it? Sorry, a H4 stop. And let me move this. Okay, yes, I'm correct. Let me just move this back. So we saw this H4 stop hunt over here. We saw a market structure break there. And the next thing we'll be looking for was a return into that range, and we'll be looking for price action to take our trade. Okay, so the standard we always look for is an intermediate low to be taken out into some sort of order block, and we had this H4 order block over here. So let me remove this daily order block that I drawn initially. In fact, let me zoom in for you guys so you can see. Okay, so this significant line even makes this trade sweeter and more what do we say, validation, gives them more validation. Okay, the confluence of this line and the confluence of the daily order block in that area, the order block, we had a bit bullish order block, and then based on our own 1 2 3 4 strategy, where there's a stop on a market structure break and then a return to the range to take a trade, everything happened perfectly with, around that area. Okay, sometimes it looks like magic, but that's just the way they do their thing. Okay, so, and as you can see, price did its thing, its thing into that order block, H4 order block, took out this intermediate lows over here with his final dip, and then boom, price zoomed off. Okay, look at that. And EU is still going. Yeah, from that level, how many pips? 500 plus pips. Yeah, 550 pips. Just because you framed your trade around a key level. Okay, and if you take note, don't forget this line came from the open and close of November and December candle. Okay, the close of November and the open of December, that line was drawn out, and as you can see, price came back to that level, hesitated there for a couple of weeks, and then took off. This is the importance of knowing where your key levels are. Okay, let's go back to the monthly. So what I want you to keep in mind today is my key levels. They are the highs and lows of higher time frames, and they are the monthly and weekly. Okay, my key levels are the opens and the close of higher time frame relationship. So when the open and the close are at the same price, those levels are always significant in the future. You take note of that. Okay, open and close relationship, and when you then get to those levels, you then start to look for an opportunity. If price don't show you what you're looking for, you don't trade it. So for example, there are a few open and close levels that price didn't do anything at, but it's even difficult to find one that it didn't. It's difficult. So for example, let's see, there's this one here. There's an open and close level there. Price came in, thought they dropped. Okay, this one here, they didn't do much. But if you look into the future, look, they came there and did something. And then you can then move this down. There's the open and a close relationship here. Look to the people. I'm referring to these candles. This one's here. So that kind of closed there and open there. Look at. So I've drawn the line. Look into the future. Look at that. Beautiful. Yeah, look at that. So if you had that level drawn out on your chart, and you said when price get to this level, I'm going to look for my standard setup. Okay, I can see a question here. MYKK says, so the key levels from monthly and weekly charts give an early indication of area of interest where future order blocks can form on a lower time frame. Yes, so not just order blocks that will form there. other blocks can form there. The price pattern we're looking for will also or can also form there. Okay, so you are not telling yourself that guaranteed standard it will happen. You let the price tell you what is happening. Okay, we only anticipate that. I anticipate that when price gets to this level, I am likely to see something happen. Okay, I am likely to see something happen. So that's why these levels are quite good. If you didn't know that, if you didn't know key levels, you wouldn't think, okay, that if price gets to that level, let's go on the low time frame and see what happened here. Let's go on H4. You see that almost exactly what we are talking about happened there. Okay. See, like clockwork. Like clockwork. Okay, let me mark that level out for you. So you can see that's the line. And what do we see instantly? We have a stop point of a previous. Oh, what are you doing this? Hold on. Okay. Okay, so I'm referring to this level now. So look, we have this low, H4 low there, taken out. And instantly we have the following day, third day, we have a structure break. Price broke the structure, retraced back into that level. Okay. If we zoomed out, we'll see that we were able to get an opportunity to enter a trade. So look at the order block within that range. So we got this H4 order block over here has been dipped into first time there. We have a fresh one here. If we drew that out, now what you then have is an intermediate low taken out into this order block. We had one here, which is not strong, but this is it. Look at this low, this week's low. Draw it out. Look at that. It took that low out into that order block and price took off again. Can you see that? Boom, off he went. And as it was going, it was dropping the signature setup again. Stop hunt of the previous H4, in this case would have been a week, previous day. Market structure break over there. Look at this low, this dip back into the order block. This order block created here. Yeah, took out this low into that order block, hit it nicely to the peep and took off again. Okay, look at that. That is just a beauty. So if you are just able to mark these levels out on your chart, it will help you, or it will give you more confidence about the kind of trade or the trade you're taking. Okay, no wonder this wise trader said the best thing that ever happened to him was learning to draw the right horizontal lines. So this line that I drew again was from the month way back in when now? This is 2017, April and May 2017. They're open and the close of May of what month is that? April. Yeah, March and April. Okay. So now, if you say you want to be a bit anal and say you want to identify all the open high, the open and closes or highs and lows, you get a bit tired. But you want to look at the ones that are close to where your price is, and then just drop your lines on it. So you don't want to mark all your chart and there's 1,000,000,001 lines on your chart. Okay. So look at this price here. This price turn there. I could say there is something here. Look, let's zoom in to do that properly. As if you notice, there is a close and an open of price there, and in fact, they came to touch that level the following month. But look at that in the future when price came back into it over here. So I'm referring to that this area, and then look at what happened there in the future. Okay. So possibly an area we can be looking at now with price, as price is advancing now, would be this one we've marked out from with this purple line. Let's make it look pretty. So look at this open and close relationship there. Do we think this price is going to get there, or they're responding to? So there's none here. That there's one here. That one there. Okay. So these are how you look at key levels. Although I believe this can go, we can have another session on this, because some of you might still be confused about it. But what I want to leave you with is this. You want to look at the opens and the closes of higher time frame candles. Those price points are most important, because the banks don't look at, open and closes of, your 1 hour candle or 15-minute candle. That's not how they work. Okay. They look at things, they look at their chart on a bigger time frame, anything from the weekly to the monthly. I kind of favor the daily as well. But once you're able to identify your key level on the monthly, you'll be able to do the same on the weekly. Okay? It's the exact same thing. And then you want to be able to frame your trade around those levels once you've identified them. So let's look at another pair quickly. Is there any question, in fact? Do you have any questions so far? MYKK said, wouldn't open and close between consecutive candles almost always line up? No. And I can give you, instant example straight away. Look at this. Can look at this. It doesn't always line up. So look at this month and that month. The close and the open don't line up. Okay. Yeah, they don't line up. But when they do, you can take it to be significant. But what you also want to look at is, okay, fine, if I've identified this price point, you're not necessarily going to trade it because it lines up. You will trade it because on a lower time frame that you're looking to enter your trade, they are doing what you normally look for. So have you got an order block at that level? Have you got a stop hunt at that level? Have you got market structure breaks at that level? So yes, you can identify, 1,000,001 open close price relationship, but that doesn't mean it is tradable. It is not tradable until price gets there and shows you its hand. Okay? Until price starts to show you the price pattern that we trade. Okay? So until it shows you just example that I gave you now. I gave you this example on Euro USD. This first level at the bottom here. Okay? This first level here, over here. You saw what price did on a lower time frame. And then this level here. You saw what price did at that level. So if price does not do that, you wouldn't need to take the trade. Okay. In fact, when I was still crazy, and because I'm an adrenaline junkie when it comes to trading a bit, I trade on the very low time frame, 1 minute and 5 minutes. In fact, I looked at the open and close relationship of the daily time frame, and if there was just one pip different in the price level, I wouldn't look at that level. I'll just disregard it. But when price get to that level and start showing me something, I take the trade there. Okay, that's how I lost all my hair. I wouldn't advise you to do it. I rather enjoy the way Israel is showing you guys to trade. It's more peaceful. You're able to think, and to think things through, and trade more methodically and with your hair intact. Okay. So is there any questions so far? Okay, all good. Brilliant. MYKK, did you do your homework from yesterday? Have you started looking at stop hunts into order blocks? Anyway, it'll be great if you can. So I would implore you to look at this as well tonight, from today, and just take a look, see what price does at this level, and you'll be amazed at some, stellar trades you'll be able to take. And when you get, price action happening for you around those levels, the trades are always really, really strong. They're always very, very strong. All right, guys. So if there's no more questions, I would say we call it a night. And we will continue. I'm sure we'll have another session on key levels, as I feel, it will be something you like a second look at. Okay. So for me, it is good night and God bless. Thank you, Israel, for the platform. It's been a great experience tonight.